And other precious metal has long been considered a smart way to invest to fight against inflation. Gold hold on to its purchasing power and value in spite of fluctuations in dollar in the long run. So your money is preserved in the longer run when the dollar is fluctuating and is trading in a lower price. Gold has had a strong 2023. Growing concerns over bank solvency, the global recession, and continued stock market turbulence have many analysts predicting that the metal will continue to surge throughout the year. Investors tend to rush into buying gold and other metals when they are concerned about other assets or the broader economy. And this year's bank failures have elevated those worries. You may have read that Costco recently began selling out of gold bars. But while gold sounds cool and can be a hedge during a stock market downturn, buying and investing in gold comes with some unique challenges. So, is gold a good investment? Gold has a reputation for being a recession-friendly investment. When the stock market has a big pullback, the price of gold often goes up. But that's not the full picture. It's a safer investment than equities. But the long-term price valuation just haven't been there. In fact, when you look at the longer time horizons, like the past 30 years, the Dow Jones Industrial Average, which is a good representation of the overall stock market, has significantly outperformed gold. And while the stock market has its ups and downs, investing in physical gold can involve a lot of unexpected costs and considerations, including insurance and secure storage. Adding gold to your portfolio can help you diversify your assets, which can help you better weather a recession. But gold doesn't produce cash flow like other assets and should be added to your investment mix in a limited quality and with caution. Now let's look at the 4 ways to invest in gold. First way is physical gold, also called bullion. This is what most people picture when they think about investing in gold. Gold bars, gold coins, hunks of pure gold, and jewelry. It's the stuff of treasure chests and bank heists. And even though it may be the most exciting way to invest in gold, it's also the most challenging to buy, store, and sell. While jewelry can sometimes accumulate value over time, appraising it can be complicated, and there are no guarantees you'll be able to sell a piece for more than you bought it for. A lot of people purchase jewelry and then want to sell it back to the business. There is a pretty decent markup on the jewelry, and the resale value is nowhere close to what you're buying. The second way is to invest in gold stocks. It is like buying any individual stock. Buying stock in gold mining company comes with some risk, but it means you have complete control over which specific companies you invest in. For example, some investors might opt for a gold mining company that practices strong environmental responsibility over one that doesn't. And while owning stock won't let you hold gold in your hand, it does mean you have the benefit of an asset you can sell at any time. The third way is to invest in gold funds. Investing in gold mutual funds means you own the assets in multiple gold-related assets, like many other companies that mine or process gold, but you don't own the actual gold or individual stocks yourself. Gold ETFs or mutual funds have more liquidity than owning physical gold and offer a level of diversification that a single stock doesn't. ETFs and mutual funds also come with certain legal protection. Be aware that some funds will have management fees. Fourth way is to invest through gold futures. A gold futures contract is an agreement to buy or sell certain amount of gold at a later date. The contract itself is what is traded on an exchange. Gold futures enjoy more liquidity than physical gold and no management fees. Though brokerages may charge a trade fee, also called a commission per contract. Keep in mind trading futures contracts involves a lot of risk and isn't a suitable investment option for an inexperienced investor. The amount of money you can lose with this investment can exceed your original investment. How to buy gold stocks, mutual funds, and ETFs? Investing in a gold stock, ETF, or mutual fund is often the best way to get exposure to gold in your portfolio. In order to buy a gold stock or fund, you'll need a brokerage account, which you can open with an online broker. Once your account is funded, you'll be able to pick the gold-related assets you'd like to invest in and place an order for them in your broker's website. Keep in mind that individual stocks and ETFs are purchased for their share price, which can range from $10 or less to 4 figures. But mutual funds have a minimum investment requirement, often of $1,000 or more. Now let's look at the gold investments and the diversification it offers. One benefit of gold investments is that it can help diversify your portfolio. Diversification refers to investing in a range of assets across a variety of industry, company sizes, and geographic areas. Owning a stock in a gold mining company or gold ETF exposes you to the gold industry. And since gold does not necessarily move in tandem with the stock market, you can further diversify your holdings. Of course, if your entire portfolio is made of gold investments, it won't be diversified at all. Now that we have seen ways to buy gold, should you really buy gold? Despite its age-old allure, gold isn't always the strong investment that movies and TV shows may have led you to believe. A lot of financial experts believe gold is a speculative investment and has a very poor long-term performance record. For individuals that still move forward on purchasing gold, buying gold in the form of a tradable security is much easier and cheaper way of incorporating it into your portfolio. Just because gold is a commodity you can hold doesn't make it a smarter investment. When the movements of the stock market are making you nervous, try to take a long-term view and remember that market volatility is normal. Often the best thing you can do for your portfolio is stick to your investment plan, not rush out and buy gold bars. Subscribe to our channel so that you don't miss any of our videos on personal finance